Welcome back, everyone. Michael here with Offshore Citizen. Today we're going to talk about possible changes in the global minimum tax. In 2021, it was a big deal that Janet Yellen, the Treasury Secretary of the United States under the Biden administration, helped to put together with the OECD this global minimum corporate tax. And so it included Pillar 1, Pillar 2. And this was all about the idea that there would be this 15% minimum tax. Now it applies typically for companies with over 750 million in annual revenue. So it doesn't apply to small businesses. But as we know with these things, they have a tendency of going downward. And to put some context around why this showed up and why it was at the time kind of supported, you had countries like Spain, countries like UK, etc., starting to bring in these digital services taxes. And essentially the argument was that these companies were not paying tax in that particular country, they were getting taxed elsewhere. And so because of kind of the way that the mismatch of taxing rules went, they said, okay, well, these countries would have the ability to top up and make sure that this minimum amount of tax was paid. So if you look, for example, in the US, you have GILTI tax, and GILTI tax is global intangible low-tax income. It's essentially part of the CFC rules that more or less means that American companies with foreign subsidiaries, loosely speaking, need to pay about 10.5% tax. Okay, that's kind of, when we're structuring people, where you end up. So it's better than the 21% corporate tax that you'd pay locally in the US, and plus state tax, et cetera, depending on where you are. But this being said, it is not zero. However, 10.5 is still a lot lower than 15. And so there's this top-up mechanism. And I've talked before about how Switzerland, for example, has been very smart about figuring out ways of exploiting this. And there's been other things going on. Well, since then, what ended up happening was that so they'd kind of got this agreement with most of the countries in the world. There was kind of some initial holdouts like Hungary, and Hungary ended up rolling over as they kind of pushed it. Famously, basically everybody went along with it. And since then, though, as the kind of details emerged, because that was sort of this high-level agreement, companies are like, whoa, hang on a second, this actually isn't really what we're looking for. And so the idea at the time had been, all right, we're doing this global minimum tax, but you guys have to ditch all these other small digital services taxes that might disproportionately affect certain big tech companies. So at the time, the Biden administration was not really big on trying to protect the local US companies. We obviously see this across a bunch of different vectors. You can see, for instance, that they have some pretty insane fines that they want to do to companies that don't follow their particular way in the EU of enforcing kind of censorship regimes, etc. You can see things related to GDPR. The list goes on, right? And you didn't have an American administration that was defending American companies. Well, enter Trump, who is very different, obviously. He's got this, America first, we want America to win. We're sort of adversarial about capturing value in terms of our policies. And so he has signed an executive order saying that the global minimum tax has no bearing or effect on the United States, and the OECD has no policy there, and the new Treasury Secretary considers the global minimum tax to be a grave mistake. Now, it's worth noting that essentially what happened was you had agreement at this sort of broad OECD level, but then every country that agreed to it had to go back locally and get that approved with their local, whatever the legislative body was. And so it turned out that Congress in the US never approved that. Okay, so the US has never actually officially approved this global minimum tax. And not all countries in general around the world are. There was sort of a timeline set in place that they were supposed to do that. Well, now the current administration is clearly very against it. They're pulling out of it. And so this is a very interesting question, because part of the thing that happens here is some of these things are reliant on other parties participating, right? You can't really do it with like half the world. If you're saying, hey, listen, half of us are going to go do this, and you guys aren't, well, all of a sudden we're basically just disadvantaging ourselves compared to the guys who are not going to participate, right? Nassim Taleb talks about this concept of the least tolerant winning, and ironically, it can go both different ways, right? The most inclusive can work, but also the least tolerant can work, so it depends on the setup. But when you have the least tolerant, then sometimes what happens is they can form around the least tolerant party. And I think this is an interesting example of that, where the US is playing such a role. But I also suspect what you're going to find is that part of the reason the US and Trump may get along with various international leaders, so they, clearly are probably going to have issues with people like Trudeau, et cetera. In Canada, Trudeau apparently is going to be gone soon, so good news for that. But why is it that this is sort of likely to work in his favor? Well, because a lot of these countries don't really want to be pushed around to begin with. And so when he comes along and says, listen, we're not going to go with those guys, we should just make a deal between us, they like that more. right? There's a ton of places in Latin America, in Africa, in Asia, who are kind of sick of sort of what we call the former developed West pushing their countries around and telling them what to do. They don't really want to be told what to do. And that fits much more with this sort of multipolar approach that the US has now. Whether that works out well for the US, whether it works out well for any of those people, I don't think is really the point of this conversation. But what it is worth noting is the direction that things are taking at the moment. And I suspect that what you will find is you will probably find these types of policies to some extent paralleled in a bunch of other parts of the world. In other words, what we had been seeing in sort of the post-COVID era was taxes going up, right? So you'd had kind of tax competition for some period of time. There was a period not that long ago, hard to believe, that the UK's policy was to be the most competitive tax regime in Europe. And since then, they've kind of gone the opposite direction. We can see this in a bunch of different places. But now you've got the US coming in and they're saying, hey, listen, we're taking our corporate tax rate from 21% down to 15%. We're pulling out of this global minimum tax thing. We're considering being much more competitive to attract people in. And what's that likely to do? I mean, it's literally tax competition. So you're likely to drive more adoption from some of these other places to kind of up their game as well. At the same time, you see rising levels of nationalism inside EU countries. We'll see, because there's kind of this mixture where they're pushing, on the one hand, for sort of more of a unified set of rules across the EU in order to increase competitiveness, et cetera, while at the same time, there's this growing nationalism, growing hostility to immigrants, et cetera. But I would suspect that those types of governments are probably going to gain an edge over the next while, and there's a push, whether it works or not, whether it's effective or ineffective is not really the point. The point is that is just the trend. And so for people who want to optimize, this is certainly a generally good route, right? You will probably have more money of the money that you are earning overall. So anyway, quite an interesting time to be around. I'll be curious to see if what happens is that a bunch of other countries come along now and decide to say, well, heck, if the US is out, then we're also out. And you see a collapsing of that. We certainly have not always seen this. In particular, where we've seen these kind of multilateral treaties in the past have largely been around climate change. And there have been a bunch of cases of like in and out, and it hasn't brought the whole thing down. So global minimum tax, we'll see. But it's worth noting that Trump has come out and specifically said if countries try and retaliate against US companies, he's going to bring various different attacks on them. And this kind of goes in line, I guess, as well with something that Mark Zuckerberg had mentioned when he was kind of going for his Embrace Free Speech video a little while ago, where he said that they were going to work with the Trump administration, and the Trump administration was going to be more proactive about defending American companies abroad. So this will be an interesting period of time. I don't have any particular predictions on how it plays out, except for the fact that I think you do see this move towards more competitiveness at the moment. And so probably you will get some greater tax competition, which, again, as I said, for people who are running businesses, et cetera, is probably a good thing. So anyway, we will find out how it goes. In the meantime, we will do what we can to optimize global taxes, et cetera. So if you're interested in any help with those things, please reach out to me. You can book a call, comedy.com/Michael-Rosmer, link in the description below, or send a message through offshorecitizen.net. And I will look forward to seeing you very soon.